What are the tax implications for Canadians selling property in the US? Canadians are continuing to invest in the red-hot US real estate market. But what they don't realize is the amount of taxes to be paid when the US situated property is eventually sold. In this video, I'll cover the basic tax implications for Canadians selling US property. Number 1, a 10% withholding tax will be imposed on the gross selling price. For example, if you're a Canadian who sells a US real estate property for $700,000, then the title insurance company will automatically withhold 10% or $70,000. Even if you lost money on the sale, the withholding tax still applies. Number 2, to avoid paying the 10% withholding tax, you should have your cross-border tax accountant file Form 8288B with the IRS. This form asks the IRS to reduce the withholding tax from 10% of the gross sales amount to the actual tax liability that you will incur upon the sale. The actual US tax liability is equal to 20% of the capital gain, being the difference between the sales amount and the amount that you initially paid to acquire the property. For example, if you made $100,000 on the sale of US property, then your actual tax liability will be approximately $20,000. Number 3, it's important that you file Form 8288B as soon as possible because it can take up to 90 days for the IRS to process the form. Once the form has been approved by the IRS, submit the approval letter to your title insurance company. The title insurance company will then remit the actual amount of the tax liability on the capital gain to the IRS and refund the excess taxes withheld directly to you. Number 4, make sure you keep receipts for all renovations made to the property. This is because renovations made prior to the sale increases the adjusted cost base of the property and reduces the resulting capital gain. The receipts for the renovations made should be submitted with Form 8288B to the IRS. Number 5, if you don't already have a US tax ID number, then complete Form W7. This Form W7 should be submitted along with Form 8288B to the IRS. Number 6, you must file a US non-resident tax return, Form 1040-NR, to the IRS by June 15th following the year of sale. This tax return reports the capital gain realized, the taxes remitted to the IRS, and the tax refund due to you or tax balance owing. Number 7, you can claim a foreign tax credit on your Canadian tax return for the US taxes paid. This avoids paying double tax twice. So here's the tip. Before selling US property, make sure to consider the US and Canadian tax implications, as well as complete Form 8288B ASAP. If you like this tip and want to know more, drop us a comment below or visit madanca.com. And as always, don't forget to like and subscribe so we can bring you great tax tips every week.